All right, we are here. Welcome on in. This is Lowcountry Money Talk. We always have all kinds of things to talk about. Phil Bloyd is here, of course, with Revolutionary Financial Group, and it is always nice to see you.
Glad to be here, Jessa, ready to get going.
We got a lot to do. We got to get it going. We got to get talking because, you know, we like to kick this show off, Phil, for our viewers on current events and just sort of wrap up what's going on in the current economy. Lots to talk about, really, but let's start with gas prices because it's on everyone's mind.
Yeah, so gas prices are down a bit. I have noticed that oil prices per barrel are moving up. So I don't know how long it's going to take for that to catch up. But, you know, we're back in the 90s as we speak today, heading back maybe towards 100, but it's mainly because of supply issues now.
Right.
We did have the reduction in gas prices mainly because people weren't using as much gas.
Yeah, well, no,
So,
supply and demand.
You know, that could be good or bad because a lot of times when we're not using as much energy, that's a sign of a recession. So we have to be careful there.
Yeah, and you know, we'll talk a little bit about that because that's a big question, right, that needs answered, although some people really feel strongly one way or another. But before we do that, let's talk a little bit about what's going on in retail.
Sure.
Because it's hard to walk into a store right now and not notice some differences from what we've been used to for, you know, maybe the last decade or so.
So what I've noticed and what I've seen in some of the profit reports coming out, or earnings report on some of the retailers, it seems there's a move towards the discounters.
Yeah.
So the discount retailers seem to be making nice profits, but they're cautioning on earnings going forward in the next quarter.
Right.
So even though they have a nice report and the value of their stock you would think would go up, it could go down. And it's because they're looking forward. Some of the bigger retailers, maybe they over-ordered their inventory.
Yeah, it really feels like that because we got used to seeing the shelves kind of bare for a while there, and now they're overflowing in some of these stores.
Feast or famine, you know.
Yes.
So what happens? They ordered for the pandemic and all this stuff, and then all the supply hit them at one time, and now it's time for a big sale.
Now it's time for a big sale. So I guess that's what makes, you know, some of this forecasting not look so great for them because they're going to take that hit on all of those orders that hit the stores.
Well, the other thing, Jess, is in the reports that have been coming out, it seems that people are buying what they need. So they're not getting as many clothes and things of this nature and all that stuff.
Yeah.
know.
And when they do, they're going to the discounters. So that's what we're seeing. So does this mean we're in a recession, and what other factors are we looking at?
Yeah, I mean, I don't think we'll get any clear definition on that until after November, right?
Yeah.
It's an election year. But, you know, I just look at indicators. So if we look at a few indicators that normally look recessionary, first of all, I'm paying 30% more for some eggs.
Right.
You know, we were joking around earlier, and I said I go to the blood bank first, and depending on what the price and how many pints they get out of me, I take that and go to the store, and that's what I fill my bag up.
Can you get one carton or two?
I don't know. But so we look at that, and we're like, okay, the yield curves are inverted on the U.S. Treasuries. So the 2 years are yielding higher than the 10-year. So that's one indicator. We still do have the back-to-back negative GDP quarters.
Yeah, and by definition.
Lower energy prices. Okay, so that's 3. So, you know, all the indicators are pointing to that. The thing that's kind of holding people back is like, well, we really have a good job market, or, you know, you can go get a job anywhere, maybe now, but as I've been hearing this week, Ford's laying off, Tesla's laid off, the tech companies are starting to lay off, so I don't know how long that holds up.
Yeah, and that's what, you know, could be challenging for folks as we move forward. If the job market does get a little bit more challenging, it's going to be really hard to talk anybody out of thinking we're in a recession, because that's about the last thing to go.
Well, I may not be first in line at the blood bank anymore.
Exactly. Well,
it may go around the building.
When we return, for those of you who are in retirement or nearing retirement, we'll talk a little bit about what is going on and current events means for you and what you might want to do about it. All right. We'll be right back. Stick around.